Dr. Michael J Burry is best known from the Hollywood film The Big Short, which was the story about how he successfully predicted the 2008 great financial crisis. He executed his famous Big Short betting against the US housing market and made over $100 million in the process. Now, Michael Burry has been warning about a big stock market crash over the past year, but he has since deleted his Twitter account yet again and gone quiet. Now, the questions you might be wondering as an investor are, what is Michael Burry currently doing with his own money? Is he 100% out of US stocks, or is he currently shorting the US stock market to capitalize on this biggest bubble in history? Well, we just got access to the latest regulatory filings, so we can now see exactly what he's been doing with his own money and see his latest portfolio. So in this video, we'll be looking at a quick recap of Michael Burry's big stock market crash warning. We'll then take a look at what he's been up to, his most recent buys and sells, and then we'll take a look at the full Michael Burry portfolio as it stands for 2022. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, a few months ago, Michael Burry was very vocal about a big stock market crash coming our way. So what has he been up to most recently with his own capital? Ready? Let's do this. So, as a quick recap, last year he said, "People always ask me what is going on in the markets, and it's simple. Greatest speculative bubble of all time in all things, by 2 orders of magnitude." And he backed up what he was saying by showing PE ratios, which is stock prices divided by the earnings, so how much the company is making. And back in 1929, before the big historic crash, PE ratio was 30. Then we all know about the big dot-com bubble and crash, and the reading at this point was 45. And he was saying at the current reading of 40, this makes it one of the greatest bubbles of all time. And he also said, "People say I didn't warn last time. I did, but no one listened. So I warned this time, and still no one listens. But I will have proof I warned." And this was all before he's now deleted his Twitter account again and gone dark. So the question is, what is Michael Burry doing with his own money right now? Well, these are the positions that he's recently closed. He reduced Geo Group by 27% and closed out CVS Health, Lockheed, Now, and Synexis. And just note that the latest update we have right now takes us up to the end of Q4 in 2021, so the beginning of this year, as it's always 3 months behind, and this is to protect the investors. And the other thing worth noting was that many of these positions he'd just opened up the quarter before. So Lockheed Now and Synexis he'd only just opened and closed out. So I would say Michael Burry is not really an investor. He's more of a trader, opening and closing within 3 months. Now, when it comes to his buys, he upped his position in CoreCivic and he's taken out 4 brand new positions. So we'll take a quick look at each one and we'll see how they've performed so far this year. First up is Bristol Myers Squibb, and this is a $40 billion multinational pharmaceutical company. And interestingly, I just looked at Warren Buffett's latest moves, and Mr. Buffett had decided to reduce his position in the same company. So it's always interesting when you get 2 mega investors that have both bought and sold the very same company. So when it comes to performance, let's compare it against the broad market. This is the S&P 500, and so far, year to date, it's down almost 9%. So how has Bristol Myers Squibb performed? Well, you can see it's actually up 9%. So this is doing really, really well. Looks like Burry was right and Buffett was wrong. Next up, Fidelity National Financial. And no, this isn't the Fidelity that we all know. This is actually a leading provider of title, insurance, and settlement services. So clearly, he's very knowledgeable on real estate, and real estate has been booming this year. So this company should have been benefiting from the title insurance. And performance, it's actually down 3%, so not as bad as the market, but still negative. Next was General Dynamics, and this is an American aerospace and defense corporation, and performance is actually up 3% on the year. So again, clearly a very good choice. And finally, we had AEA Bridges Impact. So what on earth is this? Well, this is in fact a SPAC, a special purpose acquisition company, and it's used to take companies public. So this in fact is Harley Davidson, and Harley Davidson is bringing their electric motorcycle division public through this SPAC. And so far, year to date, this is pretty much flat. So all in all, we can say Michael Burry's portfolio is doing pretty good this year, and is outperforming the general market, which is down 9%. Well done, Michael Burry. And so this is his complete portfolio as it looks 2022, and his hedge fund is actually Scion Asset Management, and is currently got 6 positions to a value of $75 million. And these were the companies that we've just looked at. But what was very interesting to me was how his portfolio looked at this time last year. Check it out. So this was Q1 in 2021, and a very different picture. He had over 30 positions, but look at the value. It came to $1.3 billion as he was using a lot of leverage. You'll notice a lot of call options and put options, as he is a shorting expert, right? And the biggest one by a mile was his big Tesla short, to the tune of $500 million. But he was also shorting US Treasury bonds. He had call options on Alphabet and Facebook, so a very different portfolio. And as you can see, today it's a very different looking portfolio. So although he's reduced it massively, what's quite interesting is that if there is a huge stock market crash coming, then why is there no shorts on the market? That would be my big question. And just as a visual, this is the size of his portfolio quarter by quarter going back to Q4 2019. So you can see it was building up, and this was the huge Tesla short that he was taking out, which was grabbing all the headlines last year. And now it's a very conservative portfolio indeed. So Michael Burry has certainly reduced down his portfolio, as this time last year it was at $1.3 billion, and now it's just sitting at a cool $75 million. So what are the conclusions and insights we can draw from these latest moves? Well, firstly, I wouldn't class Michael Burry as an investor, like say Warren Buffett. I'd call him more of a trader, as most of his positions are opened and closed within 3 months. And although someone who genuinely believes that a big stock market crash is coming would reduce down their portfolio, remember, this is one of the best known shorting experts in the world. So surely this is a once in a lifetime opportunity to short the market, right? Well, as you saw, there were 0 short positions, so he can't be that confident of a big stock market crash, right? Well, I would say his actions are actually more neutral, and it's his words that were massively negative. And remember, he's still taking out brand new positions. So there you are, guys. Hope you enjoyed. Those were the latest moves of Michael Burry. So tell me, what do you think about his latest moves? Are they bearish, bullish, neutral? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.